Hello, I'm Mi Yoon from the Department of American Cuisine. Today, May 9th, let's start the American Cuisine News. I'm Mi Yoon. I'm here again today to deliver the unaltered, honest news for American stock investors. Friday, the long-awaited day, is here again. Just like last week, the United States stock market didn't show much movement this week either. So I'm looking forward to the weekend with a lighter heart. So, as the positive trend continues today, I hope all the United States stock investors who are watching this broadcast with me can spend this weekend with a sense of relief. Tomorrow there will be a special broadcast on Mijihun featuring an appearance by Kim In-jung, the representative of Choice Stocks. This weekend, it's not a United States stock beginners class. In the meantime, we'll wrap up the United States Stock News Briefing and Choice Stocks' market outlook here, and we'll start again next time. In the meantime, we've been watching how the two systems recommended stocks have been performing and also which stocks Seeking Alpha and Choice Stocks are selecting as their top picks in the current market. We've prepared an opportunity for everyone to compare the two lists together. On tomorrow's broadcast, we'll confirm the names of the top picks from Seeking Alpha and Choice Stocks, which are currently being strongly recommended by Mijihun. I'll let you know again soon from Allure. Tomorrow, May 11th, Seeking Alpha and Choice Stocks' real names will be revealed. Especially for Choice Stocks, we're currently running a 50% discount event. If you join as a member by the day after tomorrow, you can become a Choice Stocks member at a very reasonable price, so don't miss out. Now let's start with the United States stock news for today, May 9th, which is the first Friday of the month. I will now summarize today's United States stock market conditions. If you look at the S&P 500 chart, you can see that the upward trend continued yesterday as well. We can see this by looking at the S&P 500. First of all, tech stocks perform very well. The Magnificent Seven, all seven stocks, rose together. If you look at the sector that stood out yesterday, it's what we call consumer discretionary or consumer spending. And there were a lot of miners that stood out in healthcare as well. If you look here, you can see that utilities and real estate are showing a lot of red as well. This is because defensive and value stocks usually perform better in a slowing economy, but their recent performance has been poor. Looking at it again, we can see a lot of anxiety about the economy through the S&P 500. The reason why concerns about the economy have strengthened recently is because of this. This is the first time that Didier Temple has been nominated for this award. The counterpart was the United Kingdom, and since this is the first time the United Kingdom and the United States have reached a tariff agreement, there was an expectation that more agreements would follow in the future, but I wanted to clarify that this is not necessarily the case. Yesterday, the market rose overall, with the market index climbing up to 59.04. It increased by over 5 points in a single day. So now, nearly 60% of stocks have temporarily turned bullish, as you can see here. Even with a long-term perspective, 42.3% of stocks are already above the 200-day moving average. Even in terms of the long-term trend, that's already 42%. If prices go up just a little more, it could reach as high as 50%. It's a positive momentum that's developing. Next, I'll show you the S&P 500 index chart. It has dropped down to 2242. As you can see, the fear index once soared to around 60, but as the rapid rise in volatility quickly subsided and prices stabilized, now we can see that the market is returning to a more stable state. The fear suppression index hasn't dropped either. It only went up slightly from 61 to 62. The market has begun to recover from its fear and has shifted to a more optimistic outlook compared to the mid-level. The max score, which powers the choice machine, is slowly entering the overbought zone within its typical range. It's gone up to 53. So if the stock market continues to rise for a while, the possibility of it entering the overbought stage will also increase. It seems like the stock market's leading indicator has successfully predicted the market ahead of time. Next, let's talk about the United States stock market and tech stocks. Recently, the sentiment for tech stocks has improved, so the United States stock market and tech stocks have also seen a significant increase in various sectors. If you look at the top performers, Innodata rose by 11.83%, making it the best performer. On the other hand, in the overseas market, it adjusted by 4.65%. Yesterday, Innodata announced its earnings results, and the earnings results were also very good. If you look, revenue sales reached 58.34 billion won, showing a growth of over 120% compared to last year. Now, the reason why the stock price dropped after such a good earnings announcement is because of the guidance for 2025. Let me double check the guidance once again. But the growth rate for sales did not reach 40%. If you look at it, you can see it in a slightly optimistic way. Because if the growth rate for the first quarter is 120%, but the overall annual growth rate is 40%, that means the second, third, and fourth quarters can't even reach 40% growth. If you look at it, Kyung-Young-jin has taken a rather conservative stance on the current situation, and that's why you might see it this way. The stock price rose 11.8%, then fell 4.6%. That's what happened, looking at it this way. The second reason for the good performance was the Bitcoin-related inflow, specifically the Bitcoin Exchange-Traded Fund. It surged by 10.5%, and in the current market, it has additionally risen by 2.7%. The third quarter's earnings were really good. Yesterday, after soaring by 7.85%, the stock price is now maintaining around $120. The fourth stock that saw a price increase was CrowdStrike. After rising by 6.11%, it has now recorded a sharp increase of 45.58% in just 1 month. Now, next is Trade Desk. I mentioned last time that I was looking forward to the earnings results, and the results have just been announced. Anyway, along with AMD, many of you have been following me and making purchases as the stock has recently performed well. Luckily, it surged 6.09% after hours yesterday. And then, the earnings results were announced. And following the earnings results, the stock price soared an additional 13.94%, showing a huge surge. Personally, I'm very excited and happy. That's how I feel right now. I will explain the earnings results of Trade Desk in detail so that you can understand them easily. Next, MicroStrategy rose an additional 5.58%, and now its monthly gains have exceeded 74%. Tesla also went up by 3.12%. In addition, 1.92%. Nextera by 1.90%. Amazon by 1.79%. 1.45%. AMD by 1.34%. Visa by 1.01%. Taiwan Semiconductor Manufacturing Company by 0.39%, Nvidia by 0.26%, and Meta by 0.20%. On the other hand, 0.23% and 0.75%. Currently, we are showing a strong momentum after surpassing the $102,000 mark. Next is Talon Energy. It fell by 1.17% yesterday. And then, in the overseas market, it is showing a rise of 0.96%. Talon Energy also announced its earnings yesterday. Let's take a look at the earnings results together. Q1 earnings before interest, taxes, depreciation, and amortization was $200 million, and Q2 net profit was $87 million. And what about the positive aspects? Electricity production rose by 20% plus year over year as power plant utilization increased. Additionally, as the mandatory power purchase rate increased by less than 1.2%, we recorded the industry's lowest power generation level. There was a positive announcement. And in the meantime, they used about $8.3 million for self-share buybacks, and there is still room for an additional buyback of about $1 billion until 2026. So, overall, they announced very strong and positive earnings results, and as a result, the stock price is showing a sharp rise. This is what you can see here. In the end, 1.61%, so it couldn't reflect the upward trend yesterday. This is how it can be interpreted. Now, first of all, let me explain why the United States stock market performed so well yesterday. The reason the United States stock market rose yesterday was because of Chairman Jerome Powell. Within just 1 month, the market repeated this kind of sharp rise and fall again. Please read the detailed content once. The risky asset stocks showed strength on Thursday. The market, which had been sluggish due to vague expectations and rumors, reacted to several pieces of news related to specific expectations. That's what happened. Recently, the Nasdaq Composite Index rose more than 20%. Meanwhile, it has risen by 1% entering a bull market. The Dow Jones Industrial Average rose by 647 points, and the S&P 500 index also went up by 1.55% closing at 5,718. If that's the case, since the 200-day moving average is currently at 5,748, it's creating a very strong resistance line. In order for the upward trend to continue, we need to break through this resistance line. When was that? The Invesco S and P500 High Beta Exchange Traded Fund, which invests in the most volatile stocks within the S&P 500 index, increased by 2 to 3%. But thanks to tech stocks, the rise in high-growth stocks was possible, and that's why we saw such an increase. And Bitcoin also surpassed the $100,000 mark. Trimper also encouraged direct stock purchases. He said, "If that's the case, you should buy stocks right now. This is a direct message from the Oval Office." He said this situation is unprecedented, so buy stocks now. That's what he advised. This statement was made by President Trump during a briefing where he revealed the contents of an agreement with the United Kingdom. This agreement does not include the 10% tariff that was announced earlier in April, but it does contain provisions aimed at expanding the market access of American products. This agreement includes provisions to expand market access for American agricultural exports, such as beef and dairy products, to the United Kingdom market. Triumph evaluated that the expanded market access for all products, including fresh beef and ethanol produced by American farmers, will have a positive impact. In the United Kingdom, the 10,000 cars imported annually from the United States will be subject to a reduced tariff rate of 10% instead of the existing 25% tariff. The opposing news has been delivered. President Trump also expressed expectations that the additional negotiations with China, which are scheduled to be held in Switzerland, will yield practical results. It's not just a formal meeting. However, it was strongly emphasized that the maintenance of the basic 10% tariff is not a sign of a compromise. So, don't expect the rate to drop to 10%. If you hear that, you might think it's too low. Most countries did not respond to our demands for bold tariff cuts, so we had to ask for higher tariffs. That's the point. The Turumpu president initially backed the market's supporting role. And many people are curious, but before we talk about most of April, there was something like this a month ago. This is a favorable period for the Trump administration solution, so I brought this article. And then Nasdaq had a sharp rebound of 12%. But now, unlike back then, in cases like yesterday, it goes up by 2% and then falls back down to end up with just a 1% increase. Do you know why? A month ago, there was an announcement that the interest rate would be kept on hold for the most part, so it could surge by as much as 12%. Yesterday, a 2% increase was expected to trigger another announcement today, but aside from the United Kingdom agreement, there was no other news. So, to put it simply, it's understandable that the gain dropped back down to about 1%. Yesterday, President Trump came out and bought stocks himself, and that's how it went. There was actually an asset that performed better than stocks, and that was Bitcoin. If you had split your money between Bitcoin and stocks, you would have doubled your $10,000 again. Let me explain in detail so that everyone can easily understand the various assets. On Thursday, Bitcoin exceeded $100,000 for the first time since February. This is because many analysts are evaluating that the United States stock market's rebound after the April low is a sign that the risks for all risky assets have been resolved. The fact that Bitcoin has once again surpassed the 6-digit mark is the result of a recovery in risk appetite across global markets. This is the opinion of Krashen, the global economist at Thomas Firm. The stock market is also showing a positive trend again, and investors seem to be taking a more relaxed attitude toward risky assets. So, from here we can infer that the anxiety in the current market has eased a lot. More and more investors are imagining an overly optimistic future about the outlook, and this is what you can see here. Bitcoin recorded its highest price ever, $39,225 on January 20th during the Trump administration. And then, due to the easing of tariff policies, the price, which had risen sharply, dropped to as low as $80,000 in early April. Then, on Thursday, news broke that the United States and United Kingdom had reached a preliminary trade agreement, which caused both the stock market and Bitcoin to rise together. This is how it looks. If you look at the order book of Interdax, Blockers, and Suho's Torres, which are with me here, you can see that investors are already watching the price at the end of the trim pullback and are turning their attention to the possibility of a trim rally, as you can see here. In terms of trade, there are no more concerns about Trump's trade relations. Now, the real rally is about to begin, but in reality, there are still many uncertainties in the promises that Trump made. If you listen to what he said, he will lower corporate taxes, which will significantly help with growth. Therefore, it is possible to interpret that investor sentiment is improving in a rational way. On that day, Bitcoin rose more than 5% at one point, surpassing $64,000. And so, as of now, it is being traded at around $62,000. A huge event recently took place. I'll explain it to you. Also, do you know the address of Arizona new non-fungible token Pixel Zoo? This time, the governor clearly stated in the bill for the Bitcoin custody law. Now, the state treasury holds reserves in Bitcoin, but it's not a huge amount. Only about 5% is held in Bitcoin. This news was delivered earlier this week. Neither state has actually made a direct purchase yet. But this news has sparked investors' expectations. That's how it looks. This is a technical analysis. It's a joint contributor, Tyler Rich, from the Sevens report. This expert said that Bitcoin's main support and resistance zones are between $10,650,000 and $10,150,000. That's how he explained it. If it manages to stay above $101,000 in the short term, he said, there's a good chance it could challenge the all-time high of $109,225 again. That's how he explained it. But yesterday, it actually closed above $102,000, not dollars, $101,000. So right now, the momentum is very good for Bitcoin. That's how you should see it. Recently, the reason Bitcoin is making a rally is not just because of one piece of news, but because various good factors are overlapping. That's why it's happening. Besides the exchange-traded fund-related issues, I'll explain in detail why there are so many positive factors pushing Bitcoin into a rally right now. The biggest news in this article is that New Hampshire has passed a groundbreaking bill that allows state agencies to invest up to 5% of their funds in Bitcoin. If that happens, it will be the state's first official Bitcoin investment, which is a significant development. This bill is expected to take effect 60 days after it passes. If one state invests in Bitcoin, other states may follow, potentially leading to all 50 states investing. As a result, a large-scale fire broke out in the warehouse. Following that, Arizona announced plans to make Bitcoin legal tender. Moving on to the second point. The United States Securities and Exchange Commission was expected to announce its decision on the spot Bitcoin exchange traded fund approval on Thursday, with the regulatory review anticipated to commence. But the outcome was not good. With 49 votes in favor and 48 against it, failed to reach the required 60 votes for passage, so the bill was rejected for now. So, Ho Jae-han's bill was rejected. This is how it turned out, and this is the third time it's been rejected. There is an exchange-traded fund called BlackRock's iShares Bitcoin Trust, IBIT, and after its launch, it recorded a net inflow of $6.9 billion. But here's the important part. Among Gold Exchange-Traded Fund S, the largest one is called GLD, and this exchange-traded fund has seen a net inflow of $65 billion since its launch. So that means the amount of money flowing into IBIT is actually greater than the amount flowing into gold ETFs. Therefore, Bitcoin is being recognized as a major alternative asset, taking the place of gold. So if these various large-scale funds compete and Bitcoin surpasses $100 billion in inflows, it will create an incredible momentum, and such a scenario is possible. Recently, with these major positive developments related to Bitcoin, both its strategy and MicroStrategy stocks have reached their highest prices this year. So today, regarding MicroStrategy, I have prepared a special content that I personally created. Many people who watch this broadcast with me, as well as many viewers from the United States and China, say that there are a lot of Bitcoin-related stories coming out, but they still don't really understand how to invest or find it difficult to approach Bitcoin. There are quite a few people who think this way. That's right. Bitcoin is not a stock, so you can buy and sell it on exchanges like Coinbase, but its price fluctuates very rapidly. The second way to invest is through a Bitcoin spot exchange traded fund. However, even in the United Kingdom, where Korea or I reside, spot exchange traded fund S are not yet available. Investing in Bitcoin is challenging, leading to its volatility. A more detailed explanation would be beneficial. So, when it comes to Bitcoin, the most effective and simple way to invest is to invest directly in MicroStrategy stock. First, let me show you a chart. It's a very simple chart. If you look here, you'll see a blue line and a purple line. The blue line is the price chart of Bitcoin and the purple line is the stock price chart of MicroStrategy. If you look at the chart from 2020 until now, you'll see that up until the beginning of 2024, they moved almost identically. But recently the gap has continued to widen. The reason this situation is happening is because, to put it simply, Bitcoin continues to be bought additionally. As the amount of Bitcoin held by MicroStrategy increases, you might wonder why this phenomenon occurs. Today, I'll make sure to explain the reason clearly. MicroStrategy stock is a representative investment vehicle that can leverage returns compared to directly holding Bitcoin. This is how it can be summarized. MicroStrategy buys Bitcoin through bond issuance and stock issuance, each accounting for about 50%. You can think of it this way. To buy Bitcoin, you need funds, which can be raised by issuing additional stocks or bonds. The money raised is then used to make the purchase. So to sum up, about 50% of the total amount was raised from their own funds, what they call their own capital, and the rest was financed through debt, mainly bonds. That's how they were able to make the purchase. Now let's take a simple example here. Let's say you have $500,000 in investment funds. So let's compare what happens if you invest this in Bitcoin directly versus if you invest in the stock of a company called Strategy. Let's assume we invest in Bitcoin and the price rises by around 50%. Let's explore what would happen in that scenario. First, let's examine the case where you invest in Bitcoin directly. If the total value of Bitcoin goes from $50,000 and increases by 50%, it becomes $75,000, resulting in a profit of $25,000 and a 50% return. But in this case, the leverage is much higher than 50% and I get the profit. Viewed this way, it works. So, let's say you bought Bitcoin with the same $50,000. Let me show you an example here of what happens if we invest in Microsoft or S&P 500 stocks as we promised. So, as I mentioned earlier, MicroStrategy is different in that it turns our $50,000 of assets into another $50,000 through debt. So it's not just the return from the asset we invested in, but also the return from the debt. So, to put it simply, when we invest $50,000, MicroStrategy actually invests $100,000. So, the amount of Bitcoin they buy increases to $100,000, which is double. If you look at it this way, that's how it works. Let's say MicroStrategy invested $100,000 in Bitcoin. If it increases by 50%, it becomes $150,000, resulting in a $50,000 profit. Now, but MicroStrategy still has debt, right? They have to pay back $500,000 in debt, don't they? So, if you pay back $50,000 out of $50,000, you have $100,000 left. So, in the beginning, we only invested $50,000, but now our cash has increased from $50,000 to $100,000. The value of the shares increases by $50,000. It's a simple calculation. Let me summarize. In this example, when the shares increased from $50,000 to $100,000, the recorded profit was 100%, not 50%. This is how calculations can be simplified. Let's look at an example to explain this. The $50,000 interest expenses were completely ignored. Therefore, the actual income may not be 100%, but could be a bit lower. When investing directly in Bitcoin, transaction fees are usually quite high, much higher than stock trading fees. So, I'd like to emphasize that it's important to keep this part in mind. When you use these kinds of leveraged products to build up your investments, your gains and losses can both increase significantly. Investing 1 million won is equivalent to investing 2 million won in reality. Similarly, buying stocks worth 5 million won is like investing 10 million won. So, if the price of Bitcoin rises, the profit you feel can be much greater than investing directly in Bitcoin. This is the core principle of leveraged stock investment. That's how you should look at it. When individuals trade Bitcoin directly, there are a lot of inconvenient aspects and risks involved. First of all, the biggest risk is that you could lose your assets. Bitcoin is your own asset, and if you lose it, it's completely gone. Each person has their own key, but if lost, it's impossible to recover your assets. That's how it works. Another thing is that now, with digital wallets, everything is stored on the ground, so hacking is possible. That's why if the software wallet we use is compromised, there's a risk that a cyber attacker could take over. If that happens, it means that our precious money in Bitcoin could disappear, which is a very serious risk. And also, Suzu Rion said that the price is going up. You must also pay network fees for blockchain, transaction fees for deposits and withdrawals, conversion fees, and spreads. A spread is the difference between the buying and selling price, which can be quite large. The costs are not that low, another drawback. However, there is a solution to these inconveniences. Well, that's the Spot Exchange Traded Fund that was launched in January 2024. So, for those living in the United States, if you invest in a Spot Exchange Traded Fund, you can avoid these kinds of risks and inconveniences. But the problem is, as of now, spot Bitcoin ETFs are not yet available for trading in Korea or even in the United Kingdom where I am currently living. And for reference, in the United States tax form, there's a section called B2B2 is not for spot ETFs. Please keep that in mind as well. When a spot product is approved, trading will also be possible in Korea. That's how you should view it. Now let me deliver Hangaji's message and wrap things up. If the price of Bitcoin drops sharply, the investment in spot ETFs could also result in significant losses due to leverage effects. So theoretically, if the price of Bitcoin drops by 50% in the spot exchange traded fund market, you could actually lose more than 50%. Therefore, negative 100% means you could lose your entire investment theoretically. Therefore, in the case of leverage strategies, you should always keep in mind that such theoretical losses can actually happen in reality, and I want to emphasize this warning to investors once again. Now next, let's look at the movement of the choice stock and evaluate how it compares to the MicroStrategy. As you can see here, choice stock is holding steady. Why aren't they buying this stock? There's a reason for that here. It's directly related to the SMART score in choice stock. They analyze various fields and evaluate each category, and as you can see here, the SMART score is below 8 points. If that's the case, it's in the top 92% overall and the bottom 8%. So if you look at the fundamentals, it's hard to invest. That's what you can see here. But even so, due to the sheer size of the company's assets, the MicroStrategy is possible. The valuation is currently low. The book value is $572, but the current stock price is below $414. Right now, the valuation is extremely low. If you look at the stock price by pulling it up, you can clearly see the trend. As you can see here, the stock price trend is very good. If you look here, the moving average line is creating a buy signal. Also, you can see exactly where that buy signal occurred. Now, here it is. Was it April 24th or April 23rd? On April 23rd, the 5-day moving average was at the top, followed by the 20-day midterm line with the 60-day long-term line at the bottom. From April 23rd, the order of the moving averages indicated a bullish golden cross signal as shown here. If we had bought this stock on April 23rd, our return up to now would be a whopping 19.86%. Therefore, you can see that the moving average line is giving an appropriate buy signal. This time, I'll take a look at the momentum of strategy stock. I'm receiving a strong buy signal, but there are no indicators suggesting a sell. Out of the 10, it's neutral, and the indicator for 16 weeks is showing a strong buy signal. So the momentum is very positive. That's how you can interpret it. And also, if you look at the one-year price chart, the one-year price chart is also showing a very strong upward trend. Now, if you look here, there was a resistance level around $401, but that resistance level has been broken, and this time a very strong upward trend has formed. So we've broken through that resistance line. It has broken through upward. So when the double top appeared, it could have turned into a downward trend, but it broke through that downward pattern. Now, looking at the upward trend, an uptrend has formed. Therefore, I think it is possible to say that the current stock price chart is very positive. Therefore, as of now, if the uptrend is maintained, I personally think that investing in strategy rather than directly investing in Bitcoin is a slightly more effective investment method in terms of leveraging returns. Next, I will briefly go over the earnings results of Trade Desk. And AMD as well. There was a lot of anticipation before the earnings results for Trade Desk were announced. Recently, both AMD and Trade Desk have been recommended and selected as top picks, so I was really hoping for good results, but I was also very nervous as I waited for the earnings results. Fortunately, yesterday's earnings results were really good, so after rising 6% in after-hours trading, the stock is currently up an additional 15% in pre-market trading. Now let's take a look at exactly how good the earnings results were. For the sake of time, I'll briefly summarize only the most important points so I can explain them to you. Now, if you look at the sales for the first quarter, they reached $6.16 million, and compared to last year, the growth rate was a solid 25%. So, internally, we achieved good results by improving both the so-called guidance and the actual guidance, as well as by strengthening our consensus with the market. As you can see here, there's an adjustment earnings before interest, taxes, depreciation, and amortization. Generating dollars. 2.8 million yields a margin exceeding 34%. Our current cash flow is $2.3 million, which represents a 37% margin compared to sales. A 37% cash flow margin is an outstanding achievement for our industry and serves as a benchmark for our performance. Trade Desk's strong growth is attributable to one factor: its direct access to the artificial intelligence platform, Kokai. Kokai may be unfamiliar to many of you. It's an artificial intelligence platform that efficiently manages first-party data owned by clients and carries out targeted advertising campaigns. That's how you can look at it. Here, as you can see, Kokai's market share in the last quarter was 66%. As soon as they adopt it, 66% of clients are already using this platform, this artificial intelligence platform. That's how you can see it. Kyung Young-jin says that it could even go up to 100% soon, showing this much confidence. But that's just one selling point. As shown, advertising costs decreased by 24% and promotion costs dropped by 20%. So, by using artificial intelligence platforms, we are able to run ads more efficiently and effectively. As you can see here, that's what's happening. As a result, earnings before interest, taxes, depreciation, and amortization increased by 208 million won, and net cash flow recorded 230 million won. As you can see here, CTV, which stands for Smart Television, is coming up. With connected television at the center, video sales have grown to over 40%, continuing to expand. This part is also positive. The reason is that, globally, subscription-based television usage has significantly increased, with most households now watching connected television. The reason is, when we watch YouTube, for example, the ads that appear are now personalized according to our viewing history. When personalized ads like this appear, it means that effective advertising can be carried out. If that happens, it means that more advertisers can target their ads more precisely to specific cities. When you see that the growth potential is increasing like this, that's what happens. And this time, in the conference call, Kyung Young-jin mentioned an external matter, and it was about Google. Google received an antitrust ruling. So now the open internet business environment is improving. In this way, we emphasize that in the ecosystem where we are called a closed wall, there is a growing awareness that effective advertising is no longer possible. Gadians is important. In the second half, their sales reached $682 billion. If that happens, the annual growth rate compared to last year will be 17%. Recently, it's a bit disappointing. 25%, but now it's 17%. Now, I need to briefly explain this reason. Now let's go straight to the point and look at the previous data. In Q2, they set their 2025 sales target at a minimum of $682 million, a 17% growth target. So that's the final decision. In second quarter 2024, political ad spending surged due to the election period, leading to a significant increase in sales. As a result, they set a conservative growth target of 17% for the following year. Well, that's how it is. For the next quarter, the growth rate could accelerate to over 20% again. This is how it can be interpreted positively. Next, I will analyze the earnings of Trade Desk this time and explain the most important parts in detail, breaking them down for you. Trade Desk's Q1 earnings results are very positive and can be evaluated as favorable overall. First of all, sales growth exceeded 25% compared to last year, and even compared to the overall market growth rate, it outperformed by 7%. The first point makes sense from this perspective. Let's discuss the second point. The customer retention rate has remained very high, maintaining over 95% for 11 consecutive years. This is how the results have been announced. That's how high the satisfaction level is among customers using Trade Desks right now. The transaction fees are high. Why is that? The disadvantages of moving to a new location are too numerous. Currently, in this industry, companies are able to retain about 80 to 90% of their customers. This high customer retention is possible because the cost of switching to a competitor is so high. So, in the long run, we can expect stability in our sales. Recently, more and more people are making aggressive investments and expanding their portfolios, and Trade Desk is showing this trend. It appears to match the context from before, where I defined various terms prior to the interview. Among them, you might not know what UIDZERO2 is, but it's a unified identification system. Originally, it was meant to track cookies and users, to see which products this person buys, which apps they visit, and how much they stay on certain websites. But the problem is, because of personal information protection, it's not that easy to track cookies anymore. In our case, blocking is possible. However, United IDZERO2 protects personal information, but makes it impossible to distinguish individuals. Even so, it's an innovative tool that allows you to track consumers, as you can see here, but that's not all. We are expanding OpenPass support too. We are now directly transacting with advertisers and publishers through the DoubleClick platform by collecting new data. In the advertising market, both the publisher and I act as matchmakers, though I'm unaware of the current budget. I have my own advertising spot, and for this spot I should receive at least this much. They disclose it transparently in this way. Supply and demand dictates that such deals are made only when both parties are satisfied. That's how it functions. So how did this differentiation happen? Ultari Jongwon. What we usually see as a fence or hedge is actually a closed structure, completely blocking off the area. In this way, by closing it off, you can clearly and transparently explain that a unique ecosystem has been created. Now, the part we need to acknowledge is at the very end. It's a strong cash flow. In the past, the cash flow margin was 37%, but now the cash flow has decreased. In Q1, they invested 386 billion won in self-owned stock purchases and announced they can still buy back 631 billion won worth of shares. It's amazing that the industry continues to generate significant cash flow for shareholders. So we can look forward to the stock price rising. And also, the fact that they have this much cash left is significant. In the future, they can keep increasing dividends and investing in R&D to boost their competitiveness. We can expect good things from them. So, in conclusion, this is the Trade Desk. They have shown steady growth and differentiated platform strategies, which have directly led to high expectations in the market. So, it's a tech company that mainly generates revenue from advertising. Therefore, if the economy slows down due to platform-related issues, it's important to keep in mind that this part could become a risk factor. Today's content, the final part, discusses the current state of the United States stock market. Earlier in the video, we saw several clips of AMD's Chief Executive Officer Lisa Su being interviewed. Today, Uber's Chief Executive Officer will be appearing. Now, Uber is making an announcement, and the main topic is exactly that. Now, if you listen directly to what Uber's Chief Executive Officer has to say about their future, it should be interesting. Now, that's it for today's broadcast. This week as well, thank you to everyone who invested in United States stocks together with me in China. Next weekend, I hope you all have a relaxing and peaceful time. I will gather various information so that I can help everyone with their investment activities next week as well, and I will see you again then. Until we can all retire by investing in United States stocks, let's continue our fight together. Have a happy day. Thank you.
Lee Sigok. It appeared to be a comprehensive beat, in fact, a significant one. The stock might not be reacting as expected, possibly due to slightly high expectations. What are your thoughts on that?
Yeah, it's tough to track daily stock price changes, Andrew, but I think the results were spectacular. Our transaction growth over 3 billion, trips served both on the next meal. 18% gross bookings growth came in very, very healthy as well. Similar number. Let me talk about this part in more detail. We're doing well this year in a challenging market. We'll have both good and bad days, but hopefully more good than bad. We're very happy with the results and the momentum of
was going to say the margins on the mobility business, meaning those folks who are getting in the cars is, a standout. How much pricing pressure, if you will, or opportunity power do you really have?
We've actually, pricing has been an area, we want to keep rides business as affordable as possible. And if you look at the growth rate between kind of last quarter and this quarter, our gross bookings growth rate on mobility slowed down because we didn't take price. So last quarter, for example, price increased by 4%. This year, pricing was essentially flat, and that's really for two reasons. One is we saw the insurance cost. Insurance has been a huge factor in terms of inflation, not just in transportation, but also home insurance. As you know, we saw some relief in terms of insurance increases. Pass that on to the consumer as it relates to our mobility business. And we did see a slight mix shift in terms of trips to more international trips, especially as we saw outbound travel to the United States slow down a bit compared to the overall travel sector internationally as well. So pricing is something we're very well aware of, and actually we're happy to pass on some of the pricing relief we saw to
our consumers. What do you see in terms of the mix between the mobility businesses, the ride business effectively, and the eats business at this point? So if we were to look today at a pie chart in terms of what the business looks like, mobility versus eats today, what do you envision the situation to be a couple of years from now?
It's like a Ferrari racing a Lamborghini. Both are going incredibly fast. Mobility in 1 year increased by 19% and delivery increased by 18%. These two cases have the same size, but the mobility is different. It's lower in terms of gross book, but all the mobility and delivery companies are holding on to the actual numbers. Good performance, that's the result.
There does seem to be, though, a bit of a war going on in both the delivery and mobility wars. Lyft announcing it's going to go international. So you could say this was a domestic war. I mentioned Douala again, but they buy the roads. So many things are connected to each other. In Turkey, yes.
This space, it's the space of the road and the road. This is a market that is over 1 billion won. The scenery is natural, and so are we. We've been in an enviable position in that we built most of our global footprint organically. We built these businesses over the past 15 years, brick by brick, trip by trip, so to speak. And we've always said that the platform advantage that we have, both in mobility and delivery and our global scope, really having exposure to all of these different economies, has been an advantage. Now that you see our competitors have to buy their way into the international markets, it shows you that our strategy is working. I'd much rather go organically. Turkey for us was one of the largest unaddressed markets in terms of delivery. Trendyalgo is a terrific business. They've got a great team, great tech team, and we just couldn't resist going into Turkey. We've had a lot of success there in terms of mobility, and we hope to duplicate that with acquisition and delivery.
You know, mentioning DoorDash, we're going to actually have Tony on later, the chief executive officer of DoorDash. You are suing that company, claiming that they are involved in coercive tactics. Quote, to reduce eatery, customer and customer options. Where does that stand, and why did you feel like you had to go to court?
Well, we wanted to go to court to essentially give merchants more choice. There's a direct business where ourselves and some of our competitors essentially empower merchants to be able to deliver for themselves, for their own website, etc. We think that should be an open market, and right now we don't see that as an open market. We see some of our competitors trying to make some anti-competitive moves. We just want to give
our merchants more choice, talking about anti-competitive moves. The Federal Trade Commission, you faced a lawsuit from them which says that you're charging consumers or have been charging consumers without their consent for a service called Uber One. I don't know if I still am signed up for Uber One. I might
be. I'm
not sure. And maybe that's the problem. I don't know. But where does that stand? And do you think there's an opportunity to settle that case? Well,
it's a bit of a head scratcher for us, Andrew. You know, Uber One has been incredibly popular. We've got over 30 million subscribers now to Uber One. 60% of our gross bookings come in our Uber Eats. Business is from Uber One members. I will continue to grow. What Suyo says is that many people apply, otherwise it's hard to get a job. Please experience this task. It's very simple. Canceling. That's it. To be able to cancel if you want. And the good news for us is Uber One's growth is that people are watching this business on this program. This program and the savings and our Uber One business continues to grow at
very, very high rates. What are you seeing in terms of the consumer, the strength of the consumer? There have been many concerns and worries due to the ongoing tariff discussions and other issues across the nation. We haven't really seen it in the economic numbers. Has it shown up in yours, or are you seeing anything moving forward?
We watch the same news you do, Andrew, and the fact is, as evidenced by our results, we don't see consumer slowdown at this point. Our audience growth up 14% is very consistent with what it was last quarter. Frequency is now at 6 trips per month, continues to be yes, thank you, continues to increase year on year. We don't see consumers trading down, to more affordable restaurants or pulling back from any of our services. So we haven't yet seen any signs of consumer weakness. I'd say our economic situation, more than the United States, you can say it's a trip, but the economic changes, it's strong. Our economic change is still an economic change. It's an economic change. So far, it's been good, but we need to look at the economic change much more deeply.
Thank you.